It's your favorite time of year, tax season. Come on, you know you love it. But are you maximizing your return? Well, here are some helpful last-minute tips that could put more money back in your wallet. My first tip is invest in an individual retirement account if you haven't already. Not only is this helpful for your retirement, of course, but your IRA contribution can actually lower your taxable income, and you have until the tax filing deadline to invest and claim that investment as a deduction for 2011. Keep in mind your IRA does cap at $5,000 a year or $6,000 if you're over the age of 50. Next tip, add up your medical expenses. The IRS lets you deduct out-of-pocket medical expenses including doctor copays, prescriptions, dental work, and elective surgeries like LASIK. And here's how it works. Once your medical expenses total 7.5% of your income, anything above that may qualify as a deduction. Sort of sounds like a long shot, but add up your receipts. You might be surprised. My other big tip is to file electronically. Sounds like a no-brainer, right? But get this, 1 in 5 of us are still going about it with a pen and paper. And this can be very costly. According to the IRS, electronic filers see an error rate of just 1% versus 20% for those who file on paper. Not to mention, you can expect to get your return a lot quicker within a couple of weeks. And keep in mind, if you earn $57,000 or less, you can file electronically for free through the IRS website at irs.gov. Now, if you're anticipating a big return and debating whether to save it or spend it or use it to pay down debt, here's my rule of thumb. If you have little to no savings, of course, you want to save it, all of it. If you have savings but a chunk of credit card debt, attack your debt first. And finally, if you're debt-free and have a pretty decent emergency reserve, go ahead and treat yourself and the economy while you're at it. And one last piece of advice for those who are expecting a nice big fat windfall from Uncle Sam, consider adjusting your tax withholdings to put more of that refund back into your paycheck throughout the year. Now, if you're getting a big refund, that probably means you're paying the IRS way too much out of each paycheck. So why let the government hold on to your money interest-free the whole year? Instead, go to irs.gov and in the search box type withholding calculator. From there, you'll be led to some worksheets that'll ultimately help you come up with a more appropriate withholding that's probably roughly equal to your actual tax liability. You can then make the adjustment very easily on your W-4 form at work. Just check with HR. And no excuse for filing late this year, folks. We get an extra couple of days to get our paperwork in the mail. The deadline is April 17th. Good luck. For The Daily, I'm Farnish Tarabi.